Good morning, everybody. I'm a couple minutes early here. That's okay, though. We'll do what we do, right? Kind of our thing. We're stuff doers. Good morning, man. A little bit of action in the markets today, isn't it? It is moving. A lot of fun. Love it when it moves like this. Having a good time. What is today? Today is Friday, April 4th. Man, so Cav, I think that's awesome. And for you guys that are newer here, I want you to notice Wayne hit his goals early. He's going to fly planes. Ron hit his goal early. He's going to play golf. Guys, this is the greatest job ever if you allow it to be. And Gary, here's the beauty of it. No offense. Where you think panic will kick in, who cares? I mean, not who cares about your opinion, but who cares where they panic? We trade patterns, guys. We don't trade panic. We trade patterns. We trade rules. We trade advantages, right? That's the beauty of Nexgen. Even in panic, the market does what the market does, guys. They have a memory. They have key areas. And stuff like this is what gets you to break your rules. This is what gets you to form opinions. This is what gets you to go outside what's been proven to win more than it loses. Trust me on this. I see it all the time. So guys, we're going to trade rules because rules describe a pattern, and patterns have been proven to win more than they lose. Yeah, Cav, all the time. Every time I play golf, somebody's like, oh my gosh, stock market's bad. I'm like, I don't care. I went short. I went short. It's okay. It's the beauty of being a futures trader. Getting caught up in the momentary panic that's just not our gig, guys. That's why we come to the forexfactory.com/calendar every morning. Because just like Gary posted the picture, at 17,000 they're going to panic. Guys, at 8:30 a.m. there was potential for panic. At 11:25 there's potential for panic, and we're not going to trade that panic. What we're going to do is we're just going to sidestep it. We're going to let the people do what they do when news is released, and we'll say, you know what, this could be a very volatile time. My advantages could go away. The market may be too fast to trade. I choose not to trade during high impact news. And guys, this is part of my routine every morning. I wake up, I pour a cup of coffee, turn my computer on, and while charts are loading, well, it only takes my charts like 8 seconds to load, but I come here and I'm like, okay, what's going on? What could be a market mover? And that's it, guys. It's just part of the routine. Everything we do revolves around advantages. Everything I teach, I won't say we do. We don't do this together, guys. This is for you. Man, Cav, the NASDAQ was moving so fast. John and I were talking, and I was like, it's just too quick. I can't get my stops where they need to be in time. I can't take profits, and I can't move. And this one was hilarious. Let me see if I can find it. So I take the short, and I get paid at my fib. And then I give everything back on the second contract because it was so damn fast. I could barely get to break even in time. And guys, you've got to recognize and realize that if the market's trading too fast for you to make good decisions, if the market's trading too fast for you to put your stops in the right spot, if the market's trading too fast for you to get your targets where they need to be, guys, then the market may be trading too fast for you to trade. You have to make that decision. And man, we hate to do it. We hate to say, oh no, I can't trade today. It's too fast for me. It's an ego shot. But I tell you, sometimes you got to take an ego shot. Everything that I talk about today is going to come from the trading guide, from the Nexgen page, guys. All the rules that I talk about, all the patterns that I talk about, everything that I discuss is found on the Nexgen page. So this idea right here, that when you have a strong top, that's discussed on the Nexgen page. When you have strong triggers, it's discussed on the Nexgen page. And then the one thing here is you didn't quite have the clear path, Lonnie. What you had was a 50-50 where you circled it. Your large triggers hadn't quite broken through. You still have the perfect entry, and you hit your targets, and this is perfectly executed. Guys, and this is what we're going to talk about for the first hour. We're going to talk about termination conditions. We're going to talk about momentum. We're going to talk about entries. Lonnie, you nailed it start to finish. Great job. Sorry you have an early work day. I hope it's a great day of work. I hope you have an awesome weekend. One of the things that I love to do, guys, is remind you that we're not holding back. We're not keeping secrets from you. We're not selling you a little bit with the intent to make you buy more. Everything that you need to be successful with the software will be handed to you on a golden plate this morning. And it's going to be done in the most simple way I know how to do it. So if you go to the frequently asked questions and you go to all of those definitions and phrases that are going to be used in the room, the one that we're going to focus on is the high probability trade. And a high probability trade, this is the best of the best, guys. This is the focus. There's actually, there used to be a section in the trading guide that said your first 30 days and beyond with Nexgen. And it encouraged you to focus on a high probability trend trade as a brand new user, as somebody looking for consistency. Because this is a trade that's defined when each indicator on every chart agrees with the rules for the trade. Triggers will be their strongest. No termination conditions, nothing between you and your targets. And guys, the high probability trend trade, as it's taught in this room, is nothing more than a pattern. And I can't stress that enough. It's the market doing something that produces advantages, and then it's you taking an entry based on the advantages that you see. When you follow the rules, this is a trade that has the potential to win up to 70% of the time, 80% of the time. This is a trade that's going to create a lot of confidence, because confidence comes from the memory of success, and if you're successful north of 50-60%, guys, that's a lot of confidence. But most importantly, and here comes the broken record part of what I do, guys, it teaches you to read your charts. It teaches you to let your charts tell you that the advantages are in play. It teaches you to understand where the market is likely to continue through chart reading. It teaches you to understand where the market is likely to go through chart reading. And more importantly, it teaches you to understand where the market is likely to stop through your chart reading. Guys, everything is a chart read. And the chart read lets you know that your rules are met. And what you'll find is that about 90% of your day is reading charts. 90% of your day is waiting for rules to be met, unless, of course, it's today and the market's going gangbusters, which happens every now and then. 10% of your day is typically actively trading, being in a position. And guys, your trading positions in the futures markets typically last between about 50 seconds and 2 to 3 minutes. It's fast, it moves, it's fun, it's exciting. But these rules are nothing more than a description of a pattern that's been proven to win more than it loses. And I want to keep saying that so that it sinks in. We're not trading news, we're not trading what we think is going to happen. We're trading what our indicators tell us are happening. So the high probability trend trade is 3 rules, and we're going to talk about it the best of the best way to take this trade. Each rule, when it's true, provides an advantage. And then the recipe for a trade, the equation for a trade, is a trade equals momentum plus a clear path plus an entry area. The 3 rules are met, the 3 advantages are present. It's time to enter a trade because we've described a pattern that's been proven to win more than it loses. Your 3 rules happen on only 2 charts. Had a discussion with the guy that wrote the software this morning, and he's super jazzed on using TradingView in his trading, and he's super jazzed on these 1 minute with market flow and a 15-minute, and then using a Rinko for entry. And he goes, "Man, Mark, I think you should teach that in the room." And I said, "John, it's too much. It's too much to think about. The less we have to think about as day traders, the easier it is to follow the rules, to recognize the patterns, to find success. And I said, it's awesome. It's a great tool. And when you're comfortable, move on to bigger and better things. But as a brand new user, everything that you need can be found on 2 charts. So your workspaces have a large chart and a small chart. And the large chart leads the way. The large chart it gives you 66% of your advantages. It's a very slow chart. It's a broad stroke of a brush. It's hard to see change on it. So on the most current bar, just one bar, the first bar on the large chart, you'll be able to identify the direction of the market and choose to trade in that direction. You'll identify the momentum in the market, making sure that rule number 1 is met. And you'll also be able to see the key areas where the people in charge are most likely to make decisions. And that's going to make sure that rule number 2 is met, giving you that clear path. Once you have momentum and clear path, once you understand these 2 concepts, you have everything that you need to build a bigger, better, stronger plan. One that keeps you a little more active than just the high probability trend trade. One that is consistent, one that can be proven that it wins more than it loses. Momentum and path, guys, this is your core. And you're going to notice in this room that the majority of the winners that are presented have both of these. And then you'll find an entry. You'll find an entry that suits your needs. In the beginning, your entries will come from this much smaller chart, faster chart. It's a refinement chart. It takes everything that's happening inside of this 1 bar, breaks it down into 20, 30 bars, and your entry rules are designed to pinpoint exactly where the market is most likely to continue with the trend. And by using this refinement chart, you'll be able to reduce risk, you'll be able to increase profit potential. And that's what rule number 3 is designed for, guys. Rule number 3 is designed to get you into the highest probability trend trade possible. And that's what's being taught. And we do these 2 charts, and only 2 charts, because they're a great reflection of who you're trading with or who you're trading against. Your large chart really shows the overall opinion of the market. It shows you what the people in charge want to have happen. They create trends. They produce the momentum that we're looking for that first advantage. And they react at the key areas on your large chart, the ones that could stop the market. So by letting the large crowd lead the way, you already give yourself an awful lot of advantages. But there is a small crowd, and that's your small chart. And these are the fighters, and they push, and they create retracements, and they go against everything the large chart wants. And that's okay. They're very tactical. They know what they're doing, and they know where they're doing it. And these short little bursts against the overall trend are amazing for us, because the small crowd typically loses 70 to 80% of the time, which means that when you use rule number 3 to pinpoint on that smaller, faster chart where their failure is most likely to occur, where the trend is most likely to continue from, to bounce, guys, you have the potential to win up to 70 to 80% of the time. So know who you're trading with. Make good choices. And this is what we're going to do today. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. And you guys are going to begin the process of committing to having your rules met in order to enter a trade. And if your rules aren't met, you're going to suck it up and say, all right, I'm going to sit on the sidelines. This must be part of my 90%. You have the ability to simulate. If you are on demo, if you are experienced, if you're going through a rough spot where you can't seem to get your poop in a group, guys, simulator's available. Simulator is like learning to become a real estate mogul on Monopoly, right? You can't lose your house with Monopoly money. You can't lose your house with simulator money. But you've got to build good habits on the simulator. You've got to focus on rule adherence. So practice lots. Take a ton of pictures. And the first step to becoming a confident trader ASAP, post those pictures in the room. Let me see what you're doing. Show me your chart read. Show me your trades. Ask me your questions through pictures, because every time you post in my room, you get a private session with me. Every time you post, if you describe your advantages, if you tell me where you got in, explain to me why. Why did I get in here? Why did I say this was an advantage? Guys, we're going to make sure that your chart reads are accurate. We're going to make sure that you're reading your indicators the way you should be. I'm going to help you with entries and make sure that you're taking the lowest possible risk entry. We're going to talk about smart stop placement. We can work on management together. And if you're building a trading plan, guys, you should be flooding this room with pictures. I've been reading these indicators and teaching people to read these indicators for over 5 years now. And there's little nuances that you'll see every now and then that I've already seen. So every time you post in my room, guys, it's a private session. Take advantage of that. And the goal is that you're always practicing the correct rules, that you're getting to the point to where you're only taking trades with the correct rules, because when the rules are true, you have a statistical advantage. You're trading a pattern that wins more than it loses. So if you're breaking rules for the sake of simulator money, if you're fighting trends, if you're just arbitrarily jumping in, I'm going to tell you. And you don't ever have to do what I say. I won't give trading advice. But if you are creating bad habits that feel like short-term victories, those typically lead to long-term failures. And I'm not afraid to point that out in this room. We're going to simplify. You're going to simplify, I hope. And I'm going to hand you a plan. It's called the KISS plan, the Keep It Simple plan. It's 2 trades. The first trade on this plan that I gave you is the highest probability trend trade, the best way to take it. That's what we're going to talk about for an hour. And what you learn in that high probability trend trade, the lessons, the looks, the patterns, are going to open the door for what we call medium probability trades. In a medium probability trade, that's defined as when most of your indicators line up for the trade. However, a small issue exists. Your ability to read your charts is going to have you recognizing that issue. And once you recognize an issue, you are going to change your management plan a little bit. You may have to manage a little more assertively, get to break even a little quicker, take profits at trouble spots, and it's going to be your ability to read your indicators that opens that door for you, that gets you to those next trades. Your goal should be to learn the looks. Learn what it looks like. What does the pattern look like when the advantage is present, when the edge is there? And that's the second piece of getting to where you want to be ASAP, guys. Use the spreadsheet that I'm going to give you. And I give this spreadsheet away every day because I update it nearly every day. And there's 4 tabs on the spreadsheet. I'm dropping it in the chat box right now for you. The first tab is the basic rules. And this is that idea of strong triggers. Rule number 1. This is your first advantage, exactly what it looks like. Annotated charts, and it even describes what it means to you, that advantage of momentum. And then it shows you the opposite through weak triggers, letting you know when the advantage has gone away, when maybe it's part of that 90% that you're going to incorporate into your day. Then the clear path, making sure there's no areas that could stop the market. And then what it looks like when areas are most likely to stop the market. Know the difference between rules met and rules not met, and it's going to set you up for making good decisions. There's the client trade section. Over 400 pictures of you guys being brilliant. I steal them in the classroom all the time, guys. When you're using momentum, when you're using that clear path, when you're entering at the areas inside of triggers, I'm like, oh my gosh, that's the best look ever. Let me steal it. Let me put it in the spreadsheet. Let's make this available for new users to come back and study and really commit this pattern to memory. I've broken down the entry on the small chart for both long and short trades. Lots of ideas on management. Tons of patterns that repeat themselves, guys. I take more pictures than anyone I know other than John Novak. In 2025, let's see where we're at. 2,089 pictures so far, 4 months into the year. So I'm doing about 500 pictures a day, annotated. Whoop, guys, give me a Y if you can hear me, please. No audio? A lot of times you guys can still hear me when I do this. Let me reconnect. Let's open up that room. Hopefully this works. Education room. There's that bad boy. Can you guys hear me now? Am I back? Nobody? No volume? You can hear me, Joel? Guys, anyone else? Nobody? Just Joel? All right, Joel, what do you say we talk some trash about these people? Not really. Okay, I'm gonna do a full kill on the room, and it will bump you. Please come back and see me. All right, guys. So I'm gonna do that real quick. I'm gonna disconnect, come through, knock it all out. For those of you that can hear me. So for YouTube, guys, Discord issues. I don't know why. And it always seems to happen right at the beginning of class. And I don't know why it always happens right at the beginning of class. So my apologies, YouTubers. But we are doing the full giddy up. Gonna bring it back in, start it over. It happens. You know, it's a technical kind of world. Let's start the stage. We'll call it Friday again. And we'll see if we can't get people in here having fun. Let's share a screen. What do we think, guys? Can you hear me now? There it is. Awesome. So we'll give people a second to come back in. You can hear me now, Mighty Max? I like it. You threw me a test yesterday on the pictures, Mighty Max. I'm excited to see some of your trades today. See what you're doing with this software. Gray, you keep sneaking in. Let's see what you're doing. Share some pictures, guys. I can't wait to see how you're reading your charts. I'm going to get back to the spreadsheet here. There's a section for you to build your plan. And this is where you're going to put your pictures. This is where you're going to put the patterns that you're trading so that you can commit them to memory so that you never miss out on them. You're going to learn to manage your trades your way. I'm going to give you a very mechanical way, but you're going to learn to do it your way. Take a lot of pictures. Go through. Guys, when you take a trade, show me the trade start to finish. We'll talk about management. And then you're going to begin to recognize patterns. Take those pictures. Drop them in the room. Mark, I keep noticing that price seems to snap back to those large triggers off of an area. And I'll be like, hey, that's what we call the gap theory. Drop that in there. Learn that look. And then finally, there's your trade tracking sheet. And this is a good one because it's just a place to put the pictures of your trades. So there's a picture in there, how to annotate for the best feedback. And let me show you that one because this is important. When you post in the room, guys, I want to know the whys. I want to know, did you think you had strong triggers or were you trading with weak triggers? There is no right answer. There is no points off for messing up a rule. I just want to know what your chart read is. Because if I can help you, if I can make it a little more accurate, guys, give me the opportunity to do that by describing those 3 rules. Describe your momentum, tell me about your path, and show me your entry, and more importantly, show it all the way to the exit. Let me see where you got out as well. And every time you do this, every time you annotate a chart with the whys, you're writing a story. You're creating a recipe that's focused on success. You're telling yourself, this is how I take the great trades. If I have this and this and that, that's my great trade. And guys, if you post in the room and there's a mistake, you're also writing the recipe for avoidance, getting away from those mistakes. And that's what you're going to see from the feedback section. Every trade that you post, I'm going to have something to say about it. And sometimes it's going to be a gold star high five. And sometimes it's going to be, man, I see that you made money, way to beat the odds, but trading into those termination conditions is going to lose more than it wins. And trading from the wrong side of the triggers. And you'll have that feedback over here in the feedback section. So if every morning you commit 4 to 5 minutes of your day to looking at what you did yesterday and ask yourself what worked. And you'll know because it'll be right there in the feedback. These are the trades that work. This is what I want to repeat today. This is what I want to focus on today. And if you ask yourself what didn't work, well, then you're going to be able to say, all right, now I know what to avoid. So I'm focusing on something, but not to take the trade, not to enter the trade, but to avoid the trade. Did anyone do that this morning? Some of you should be saying 50-50 trades with divergence didn't work for me. Trading indetermination conditions, hoping they would break, didn't work for me. Getting in on the wrong side of the triggers didn't work for me. And guys, I'm telling you, if you do this, it sets you up for the day. And it will accelerate the learning process. So be focused on taking pictures. The more pictures you take, the quicker you're going to get to where you want to be. We're going to learn. You're going to simulate. We're going to keep it simple together, guys. If you have questions, post them in the room. If you take trades, post them in the room. That's what the second half of class is, just giving you feedback on what you did. But if you're new with me, let's make sure you understand what you're looking at. And the first thing we talk about is trigger lines, because trigger lines show up in everything. There are small triggers. These are the solid 2 lines. And there are the large triggers. These are the dashed 2 lines. Don't overthink it. Small and large. If they're green, they're up. If they're red, they're down. You're going to use trigger lines to define momentum. You're going to use trigger lines to define termination conditions. You're going to use trigger lines to define entries. Guys, trigger lines show up in everything. And the only thing you need to know is that these are small and these are large. And then both charts are going to have areas. And areas have names. And you don't have to know why the areas came to be. Just know the names. You're going to see divergence high lines. It's a magenta line that prints if there's a loss of momentum at a pivot. There's divergence low lines. It's a cyan line that will print if there is a loss of momentum at a pivot. There's Fibonacci resistance. That's the red lines. Is that better, Jen? There's Fibonacci support. That's the blue lines. There's yellow 1-to-1s. And there's a midband. Awesome. Know the names. That's all you need to know, is just know what they're called. On a large chart, all of these areas can stop the market. This is where the large crowd is making decisions. On a small chart, we're going to use areas to enter. And everything starts large chart. Everything starts with strong triggers, momentum. Guys, that first advantage. So rule number 1 says large chart, 13.2, needs strong trigger lines. The only way to have strong trigger lines is if you're trading with the trend. So if the background's green, it's going up. If it's red, it's going down. It doesn't mean jump in. It means look for your rules to be met to trade in the direction of the trend. That's one of the advantages you can give yourself. And then in an uptrend or a downtrend, in order to have strong triggers, the colors of the triggers in the background must match, large and small. So everything's green or everything's red. If everything isn't green or red, you don't have strong triggers. And guys, strong triggers is nothing more than a look. It's a comparison between the small and large triggers. It has nothing to do with price bars. Strong triggers has nothing to do with those areas. It just means that in an uptrend, my small triggers are up and above the large triggers, and the large triggers are wide. They're open. They're angled in the direction of the trend. And it's the space that's created that lets me know I have strong triggers. In a downtrend, smalls are below the large are wide. The space between the two lets me know that I have strong triggers. And strong triggers means that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. OFM, you're going to see it on charts all day long. OFM. Guys, when you have strong triggers, the market is more likely to push in the direction of the trend. When you have strong triggers, that's what it takes to break those key Fibonacci areas when there's the potential. When you have strong triggers, guys, it can even cover some of the mistakes that we make as new users. But strong triggers don't last. Eventually, momentum goes away. The buyers or sellers get exhausted. They take profits. They get out of the market. And you see that the small triggers return to the large triggers. This is what we call a weakening of the large triggers. And when you weaken large triggers, anything could happen up or down. And that's the phrase you're going to use, and you're going to see it on charts, annotated, ACH. Anything can happen. And guys, it's very true. This is where, from the middle of nowhere, the market tends to retrace. This is where key Fibonacci areas tend to hold. So I encourage new users, keep it very black and white in the beginning. You either have strong triggers or you have weak triggers. And what happens is as you grow, and you commit to strong triggers and you avoid weak triggers, you're going to realize with a little bit of time with the software that there's advantages just before the small triggers get in, and you can still look for trades. And you'll get to the point where you're so good at reading charts that maybe you can capitalize on a weak trigger trade. But in the beginning, let it either be strong or weak. Know that there's more coming. Is everybody good with that? That's usually a pretty easy lesson for people. Strong triggers, push a market. Strong triggers, push a market. Weakened triggers, I get bigger retracements. I mean, we're looking at a lesson right now, right? Weak triggers, there's a big retracement. Strong triggers, the market pushes. Strong triggers, the market pushes. And look at this. Even with strong triggers, the market reverses. Does everybody see that big blue line? That's an area. That's an area that could stop the market. And you knew about that area 20 minutes before the market got there. And that's what takes us into rule number 2. Making sure that there's no termination conditions. Making sure that there's no areas that may stop the market. Making sure that I have room to my profit targets. We're going to call it a clear path. And guys, momentum and path, once you understand these two concepts, you have everything that you need. So what's a termination condition? A termination condition is, it's an area. It's a Fibonacci-based indicator that may stop the market. And guys, it's going to be a comparison of the area, support, resistance, one-to-ones, divergence highs and lows. You're going to compare it with the trigger lines. And the trigger lines are going to tell you whether or not you've reached a termination condition. And I think the easiest way to say it is on your large chart. Remember, large chart leads the way. Horizontal lines are where decisions are made by the large crowd. Horizontal lines are where the buyers buy and the sellers sell, where fights happen, where retracements come from, more often than not. So in order to find a termination condition, let's let the large chart get to their decision-making point. And we say that price reaches resistance. Price reaches support. And once price reaches this red line, reaches that divergence high, reaches those yellow one-to-ones, we're done with price. I mean, we just don't need it anymore. They're at their decision-making point. Now the triggers tell the story. So when price reaches resistance, I want you to ask yourself, where are my triggers? And if they remain below resistance, resistance is a termination condition. It may reverse the market. It may create an untradeable bounce. There may be a fight there that you don't want to be in, and it may break. And the reality is, and this is a sad reality for some people, is you never know. Sometimes they break and sometimes they hold. If it does hold and it reverses the market, we're going to call it a strong top. And a strong top is the precursor to the highest probability trend trades you could take. A strong top is a mandatory for the second trade on your trade plan. So price reaches an area, where are my triggers? If they remain below, it's a termination. Rule number 2 is not met. Just no trades into the area. Wait for the reaction. Everything goes down. Price reaches Fibonacci support. I'm done with price. Let's go to the triggers. Ask yourself, where are the triggers? If triggers remain above support, guess what? Support is a termination condition. It might break. It might create a fight, a bounce, a reversal. If it's a reversal, it's a strong bottom. But I'll never know. I'll never know what the reaction's going to be. So I choose to do nothing. Absolutely no trades into the area. It doesn't mean go long because of a blue line. It doesn't mean go short. It means sit on your hands and wait for the reaction, because Murphy's Law says if you go short at a red line, it's going to break that time, right? That's just the odds. So this is what it looks like. Cav, what happens when price and triggers get above support and then they reverse? Well, you have a pivot that makes the market change direction. That's it. Sometimes it happens, Cav. And here's the thing. We're not in control. There will be times when it reverses from nowhere. Sometimes weak triggers can give you a heads up. Sometimes it reverses from nowhere. Again, weak triggers can give you a heads up. Absolutely. Weak triggers can give you a heads up, right? Do you guys see it? Weakness, reversal, weakness, reversal, weakness, reversal. So rule number 1 is designed to give you a look where the market is more likely to continue forward than not. And Cav, they happen all the time, which is why we focus on rules. And I'm answering you like you're a new person. I think it's a great question. But don't worry about every nuance in the market, new people. Focus on the rules. Focus on the very simple. And what it does is it almost puts blinders on to all the possibilities, because there's a million possibilities in a market that you don't control. But if you focus on first momentum, the separation between the triggers, and then you learn to identify price reaching an area, and you say to yourself, my triggers are below, do absolutely nothing, wait for the reaction, guys, it's going to keep you out of a metric buttload. That's a technical term. I probably shouldn't have said that, but I did. It's going to keep you out of so much trouble, because the reality is you never know what the reaction is going to be. But more often than not, if price reaches an area and the triggers don't break, guys, it creates an untradeable bounce at the minimum. Sometimes it does break, but we don't consider an area broken until both the small and the large triggers get north of it. So price reaches resistance, the triggers are below, do absolutely nothing, and remain in a state of doing nothing until both small and large triggers break that area if it's going to break. Now your path is clear. And it remains clear until you reach the next area. And resistance actually behaves as support. Buyers and sellers, Joel. Buyers and sellers, volatility, indecision, flooding the market with orders. Everybody wanting to be a part of it. Yeah, or nitrous oxide. That's all it is guys, it's forces bigger than you making this happen. So price reaches, no triggers, no trade. Small and large get above, the area is broken, the path is clear. It remains clear until you reach the next area. If you keep it this black and white for 30 days, you're going to be able to find this trade next, guys. And this middle look here, number 2. When your small smash through an area, but the large are still below, in this case, 50% of your triggers are through and 50% are not. As long as you have those strong triggers, that odds favorable momentum, this fib has the potential to break. But it's only potential, which means that you have to manage a little more assertively. So know the difference. Price reaches, triggers remain above support, no trades. Wait for the reaction. Then it has the potential to break, but it's never a guarantee. And once the small and large get below support, support behaves as resistance, your path is clear all the way until you hit the next line. So let's see if this actually happens. Price comes down, reaches Fibonacci support, even with odds favorable momentum. You say, where are my triggers? They all remain above, and nobody takes a loser into that blue line. Market goes up, hits Fibonacci resistance, the triggers remain below. Look at the tail. Guys, that's a reaction to key Fibonacci areas. And then they push up, and they're able to break, but there's not enough strength to keep it moving, and you get a big untradeable retracement. And then eventually, the market has the potential to break the key area, but it can't. And a reversal happens. And it breaks support, and it breaks support. And then with weak triggers, it retraces all the way to resistance that used to be support. And the large triggers don't follow. And guys, this is what we call the gap theory. You ever hit one of these areas and the large triggers are more than a full bar away? Price is likely to close the gap back to those triggers. But what you'll find is that these areas, they know about them. And now currently in crude oil, a divergence low without the triggers breaking created a giant retracement. And then it hit Fibonacci support with weak triggers, and it created a giant retracement all the way to that divergence high. And guys, you're looking at a market that's caught in a range. And rule number 2 is defining the range that it has to break out of so that you can feel good about having an edge or an advantage. Can you guys give me a why? Cav, did that answer the question? It's going to reverse from the middle of nowhere all day long, guys. But rule number 1's not met here. Rule number 2 is not met here. Rule number 1 is not met here. So if you're focusing on rule adherence, it keeps you out of a lot of the mess. And there's going to be times when your areas are stacked and your path isn't clear, and even though they have the potential to break, I keep hitting another line. And guys, this is 90% of your day. And eventually you realize that it's okay to do nothing. Eventually you realize that the futures markets trade billions, that there's so much opportunity. You just have to find your opportunity. And Joel, did that answer your question? The market goes fast when everybody's involved. When the volume goes up, when it's flooded with buy orders, when it's flooded with sell orders. And it creates that momentum. And that rule number 1 takes advantage of that momentum. So the buyers were in charge, and right here the sellers took over, and they flooded the market with sell orders. So much so that everybody around them said, oh no, we should be selling too. And then their friends said, we should be selling too. And it creates all this momentum. And that momentum is hard to stop until you start getting to places where they're taking profits. I hope that answered it. Guys, there's going to be times where you're just doing nothing. You don't have to be in every move. You don't have to be first one in or last one out. It takes $400 a day in a market that trades billions hourly to be in a 6-figure income based on your trading. So learn to take advantage of those. Learn to look for momentum. Learn to insist on path. Let's see. This is the S&P. Weakness, and it pushes up. There's a lot of those kind of middle of nowheres, right? A lot of times. But they still take a second to react at key areas. Support becomes resistance, and look at that. They pull all the way back to resistance. Whoops. And the large triggers don't follow, and it closes the gap to the large triggers. Over and over, we see this. One more termination condition, guys. You're awful quiet today. It's making me nervous. 3 divergences in the same price range can terminate a trend. Divergence is a loss of momentum. Every time you see a negative number in a cyan line, every time you see a negative number in a magenta line, you have to say to yourself, egads and little fishes. Change is coming. 3 losses of momentum. 3 times the buyers told the sellers no and then pushed harder. Guys, when you see this on a small chart, it's the only termination condition that I accept on a small chart, and it's showing me change that I can't see on the large chart. It's showing me change that's not present on such a slow moving chart. So 3 divergences in the same price range is the only time I won't look for an entry if I have momentum and clear path. Are you guys ready to go look for entries? Let's define it. How do we pinpoint where the market is most likely to continue? Well, rule number 3 says you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Inside of large triggers. You're going to use a limit order to buy this push down by the small crowd, and you're going to do it in an area, at a fib, at a midband, or a yellow 1-to-1, and those areas have to be inside of triggers, guys. That's the key, that those areas are inside of triggers, because triggers will define where the retracement is most likely to happen. I mentioned that price snaps back to the large triggers on the large chart for a reason, because it happens on both charts. Price accelerates away from large triggers, and it typically returns to large triggers, and it happens on both time frames, large and small. So on your entry chart, you have the 5-1 large triggers, which are native to that chart, which will be used to define momentum. But you also have your 13-2, your large chart large triggers. We call them synthetic because they're from a different time frame. So you have large and synthetic, and price may retrace to either. So when it's time to look for an entry, you'll be able to know exactly where price is most likely to retrace. That helps you in defining entries. You can be even more accurate if you allow those large and synthetic triggers to overlap one another. This is what we call favorable large triggers. And what it does is it takes 2 potential retracement spots and turns them into 1. It increases accuracy. And then you put an area, fib, midband, or yellow 1-to-1 inside of that retracement zone. Well, now you have something solid for the market to bounce from. Some place where the market is most likely to change direction and continue with the trend. Someplace where the small crowd is most likely to fail. And guys, that's the magic of rule number 3. Is it depends on the large chart rules being met. It depends on momentum. It depends on clear path. And I'm going to say it again, that's your core. That's your focus. New users be able to define both. When the rules are met on the large chart, in this case, your large chart is going up. It's going up strong, and there's nothing in the way. And your small chart is following suit. It's going up strong, and we don't care if there's something in the way because terminations are defined on a large chart. Guys, everything is screaming, and the fear of missing out grips you, and it says, hey, they're going without you, Cav. Jen, you're never going to make money because we're going up so fast. Joel Beal, you might as well go greet at Walmart. You're not going to make money in this market. They're leaving you. And then the pattern starts, and then the reversal bar prints. And guys, this reversal bar is the beginning of a pullback. This reversal bar is the beginning of the small crowd fight. And once you get the reversal bar, it's your job to identify where the retracement is most likely to go. And price tends to return to large triggers. You should write that down. So I have large triggers and synthetic triggers on my entry chart. So from the highest line of the triggers to the lowest line of the triggers is where the market is most likely to retrace. The tighter they are, one on top of the other, the smaller the area becomes. That helps with accuracy. And when I identify the trigger lines, I understand where the market may return. Notice that I use may, not will, should, but may. It could, it's likely. But I need an area inside of triggers. Areas can be fibs, midbands, or yellow 1-to-1s, guys. That is the whole list. Fibs, midbands, yellow 1-to-1s. If you see anything else inside of those triggers, it's not one of your areas. And then all caps. Those areas are inside. Below the highest line, above the lowest line. Those areas are in the retracement zone, guys. In this box that you see, from the highest area inside of triggers to the lowest area inside of triggers, this shows me where the market's most likely to bounce in the direction of the trend from the large chart. It shows me where the trend is most likely to continue, where the small crowd is most likely to fail. And guys, you're going to develop a little faith in that box. You are going to study this pattern, and you're going to activate a limit order 2 ticks above the highest point of support inside of those triggers. And now you've done all you can do. Now you're just waiting for the entry. The only thing you'll ever be in control of is whether or not your rules are met. Another picture here. I love this one. The sharks are the big money investors. The sharks are the large crowd. The sharks create trends. They create momentum. They react at areas. And guys, when they get all that hard work done, we're going to be a remora. We're going to capitalize on the efforts that they put in. And we're going to do it in an area inside of triggers because the sharks want it to go up. Some delusional remoras want it to go down, but they fail more often than they don't. And if they push to your entry order, you're in a long position. You bought the market. You're anticipating it to go up with the large chart. And you're in a long order or a long position, and you have the advantage of a market where the odds are favorable for it to continue up. And you have the advantage of a market that has a clear path, nothing on the large chart to create a bounce. And you have the advantage of having defined precisely where the market is most likely to continue. And guys, this is your high probability trend trade. And this is a pattern that's been proven to win more than it loses. So you've got to learn that pattern. And this is the entry pattern. The reversal bar begins the pullback. The reversal bar is not your entry. You're going to define where the retracement is most likely to go using the large and synthetic triggers. You're going to define where it's most likely to bounce using the areas within. And if there's multiple areas, you're going to create a window of opportunity, if you will. And you're going to understand that price may retrace all the way to the bottom of those triggers. And it's most likely to bounce somewhere in this window. And you're going to activate your limit order a tick or two above that highest point of support, and you're going to wait for the small crowd to push. And guys, by defining where the market is most likely to continue, you understand that when you get beyond the retracement zone below those triggers, when you get beyond the areas most likely to create a bounce, the areas inside, guys, nothing down here is good for you. Once you get to the wrong side of the triggers, the advantage of rule number 3 is no longer in play. Once you get to the wrong side of the triggers, you're actually where the market should not go if this is going to be one of those winners, and this is outside of your window. So other direction, reversal bar begins the pullback, not your entry. Define where the pullback is most likely to go with the large and synthetic triggers, not your entry. Define where it's most likely to bounce at the areas inside of those triggers. Activate your limit order 2 ticks below, fully understanding that anything beyond the triggers, beyond the bounce points, beyond the retracement zone, anything beyond on the wrong side of the triggers is not a part of the entry equation. Rule number 3 is no longer met on the wrong side of the triggers. And you're going to use that concept, defining where the market is most likely to continue, to define where the market should not go. Use that language. If this is going to be one of my 70 to 80%, the market should not go 4 to 5 ticks beyond those triggers. And if it does, my advantage is gone. And this is where your initial stop will be placed. And guys, 20 to 30% of the time when you're taking high probability trend trades, 2 to 3 out of every 10, they're going to get your stop. And losses are a normal part of a positive equity curve. Losses are a cost of doing business. You can control whether you're taking losses based on a pattern that's been proven to win more than it loses, or if you are forfeiting advantages and taking losses that are avoidable. And I'm going to tell you, avoidable losses are the biggest killers of accounts. Be willing to lose, but lose the right trades. Learn the pattern. Here's the pattern together, guys. And there's like 400 examples of this in the spreadsheet. Strong triggers, clear path, and the market's trading all the way up here when the rules are met. And then the magic happens. Reversal bar, identify where the market is most likely to continue, and take your entry. And by doing so, by getting in at the areas inside of triggers, you've reduced your risk because your stop goes where the market shouldn't, and you've increased the distance to trouble. So reduces risk, increases profitability, guys. That's the pattern. And you can use those tails on a large chart. I kind of left that out of the equation. When the rules are met on the large chart, when you have momentum, when your path is clear, this is a pretty good example. Man, they are screaming today. Where did it go? Can you guys give me a Y if you see it? Odds favorable momentum, clear path. That's the first 2 rules, right? Let's scroll back and look at that circle on my smaller, faster chart. Man, they are flying today. And even when they're flying, price pulls right back to support in the retracement zone. And it did it right here as well. Whoops. Momentum and path. Momentum and path. Did anybody catch those? I'm looking at the timestamps. Those are so fast. JK, you got it? Awesome. Yeah, NASDAQ was untradeable for me this morning. I played on Sim. But guys, this is your pattern. And if you open up a large chart, you can go back and study that pattern. Look for odds favorable momentum. Look for a clear path. Circle a tail. See what it looks like. Circle a tail. See what it looks like. Build recognition of the pattern, guys. My colors don't match. I don't have odds favorable momentum. Don't have a clear path down. Today's a great day to go golf. Well, not in Austin because it's raining, but today's a great day to go to the beach. There's crude oil. There's odds favorable momentum and a clear path. What did that look like? I circled the tail. That tail is the retracement on the small chart. Holy smokes. Right back to resistance, right in the retracement zone. There it is. Do you guys see it? Can you give me a Y, maybe an amen, a hallelujah? Something that lets me know that you know. All we trade is patterns. All we do is look for the market doing the same thing the market always does. And the market's going to bless us with entries every now and then. The market's going to give us opportunities. And I didn't have to trade into a termination condition. I didn't have to fight momentum, right? Rule number 2 told you, don't go long. Rule number 2 told you, don't go short. But if you sit through the bad, you find the good. Pretty amazing. I love it. I get excited about this stuff, guys. First one didn't make it. They were 50-50 with divergence. It may not fit your plan, Morgan, but does that change the fact that with all that momentum, where did the market bounce? Let's focus on entries, Morgan, not trading plans. We're not discussing anybody's trading plans. We're talking about where the market is most likely to continue, at areas inside of triggers. Momentum, this one only had the potential to break, right? Smalls below, large hadn't passed, but it still bounced twice off the mid-band right in the retracement zone. Maybe that's not your trade. Maybe it is. I don't know. It's not my job to tell you what's your trade or not. It's a lower probability look, but the entry pattern remains true, and that's what we're learning right now in the beginning, guys. We're learning the pattern to define where the market is most likely to continue if it's going to. Does that make sense, Morgan? And that's what you do when you start having a plan, is you start saying, man, I know this pattern. I get this pattern, but I'm not comfortable because it forfeits too many advantages for me. So guys, you've got to be able to recognize advantages. Morgan, thank you. That was a great segue. How do I recognize advantages? I go take pictures of them. This is Chart Reading 101, guys. This is part of the Everything You Need to Be Successful series. The goal is that you're looking at your large chart, that you identify momentum and path. Morgan identified that one as a 50-50. And then when a small chart showed losses of momentum, he said, that's not my trade, Mark. I'm okay missing it because I'm not comfortable with my advantages going away. And Morgan, I think that's a great decision. You know there's more coming. So the goal is that you look at your large chart, and once you can identify strong and weak triggers, once you can know the difference between a clear path and a termination conditions, you have the foundation, guys. You have everything you need to find more success. So go take 25 pictures each. I want you guys to do this weekend if you haven't done this yet. Go take 25 pictures of strong triggers, Mighty Max. Go take 25 pictures of strong triggers. Roy, take 25 pictures of termination conditions. Nanda, Bob, JK, Alex, John, 20, all of you guys. Go get smarter. But don't just take the pictures. Annotate. Why is this strong triggers? Hopefully this is a good annotated one. It's strong triggers because the smalls have separated from the large and there's space between. And it's pointing them all out. Can't do it, Pete. You can't overpost. So go through, take the pictures, annotate the charts, create the correlation between your brain and your eyes. I see strong triggers because they're separated, because the colors match. This is rule number 1. I have the advantage of momentum. And then as you go through this drill, guys, I'm not going to send you out in the wild all by yourself. This is the high probability trend trade checklist sheet. You're going to get this one as well. And guys, this is designed to put you in the high probability trend trade with the absolutely, positively best of the best way you could ever take this trade. And it starts from a strong top or bottom, but it's not mandatory, but it increases the likelihood of success. So if a no triggers through termination reverses the market, it's a strong top. And if a no triggers through termination reverses the market, it's a strong bottom. Do you have momentum or is it weakness? Are you trading into termination conditions or are you waiting for the clear path? Have you defined where the market is most likely to continue? So guys, we break these concepts down individually at first. Learn momentum, commit to it. And then couple that with your education on a clear path. Commit to it. And then once you understand these two, go find an entry. It's the entries that change over time because you begin to find different ways to use the software. The next page on that one is the checklist. It was just without the pictures, so you can print this out and put it on your desktop. Nobody in the history of the checklist has done worse than 70%. I would encourage you to try to follow it truthfully and prove me wrong on that. Because if you take the time to do that, you're going to be with me forever. There's no doubt in my mind the software works. You're going to go use this checklist and convince yourself that you can find success with it. Hey guys, don't turn it into a pissing match in my room. Annotate if you need feedback. If you experienced users don't need feedback, take 2 or 3 good ones. Show everybody how smart you are. If you need feedback, let's do that. Let's not go crazy. If you're building a plan, drop it in. I'll give feedback on everything, but you guys know. Guys, this is the KISS plan. This is the stepping stone in your learning journey. This is designed to optimize your chances of success. I know. With the high probability trend trade. I don't think you can post too much. I think there's a point where people just need a little positive affirmation. I'll always give it. Guys, through simulation study, class feedback, continuous practice, you're going to make your own plan. You're going to create your plan. You're going to see more things. You're going to find different ways to manage. But until you can do that, as you learn to read your indicators, guys, this one optimizes your chances of success. This was a relatively recent addition. There's 2 things you need to know before you ever enter the market. You need to know why you'll enter a trade. And that's got to be because your rules are met. Because your rules, they describe a pattern. And the pattern has been proven to win more than it loses. And if you validate that, if you verify that, if you go back and study it and you learn to trust it, you'll never miss the entry. And you'll focus more on the actual process than you do the result, because you know that the results follow the process. And you have to know why you'll exit the trade, guys. Advantages go away. It happens sometimes. You take the perfect trade, and then it goes 4 to 5 ticks beyond the triggers, and you choose to exit because the advantage is gone. Or you take the perfect high probability trend trade, and 3 divergences print, and you choose to exit because the advantage is gone. Or maybe you take the perfect 50-50 trade and then divergence prints and you choose to exit because the advantage is gone. Guys, your chart reading is going to let you recognize that quickly, and it's going to set you up to build your management plan. But until you can do that, the path of least resistance is the most mechanical path with the fewest moving parts. So define your entry. That's what we just spent a whole hour doing. And then once you're in, you've got to manage it. So until you can read your indicators, I've created, and I'm pretty proud of this, the most mechanical plan I could ever come up with for you. And it's based on 2 contracts. And it helps you understand stop placement. And really, I think the most important aspect of this plan is it's focused on getting you paid. 1 contract comes off quick, $100 in your pocket. And then the stop placement allows you to develop trust in the large chart. And guys, everything about this plan is if-then. Everything about this plan is dependent on your ability to take the right entry, because great entries create manageable trades. So if entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond those triggers. And this is where the market should not go. Use that phrase. You'll know your risk before you ever enter the trade. And you have to be okay, in this case, with $150 per contract. And if you're not, you should make the choice, perhaps. I won't tell you the choices to make. Maybe you should say to yourself, I'll just not take it. Instead of putting my stop in the retracement zone, instead of putting my stop below an area that could create a bounce because it's a perceived safer stop, it's just better not to, because Murphy's Law says they're going to hit your stop right in the retracement zone and then drop like a ton of bricks, and you're going to have that feeling of being left out. Targets are predefined at 100 and 200, and if they don't stop you out, you get a reversal bar. And a reversal bar is in the direction of your trade. It's confirming that now the market is going in the direction of the large chart momentum, the large chart clear path. It's confirming that the area inside of triggers has created a bounce, and you're going to redefine where the market should not go. You're going to put your new stop 2 ticks above that reversal bar, and you're going to say, if they want my money, they're going to have to come get me up here. And sometimes they will. More often than not, they won't. And if they don't, it means they're going to your first target. And your first target's only $100 away from your amazing entry, guys. And if price reaches that target, one contract is automatically removed, and those funds go into your account. And with one contract remaining, you're going to learn to trust the large chart by moving your stop to break even. Because now you'll have zero risk and you'll have money in the bank. You got paid. And guys, that's the goal of trading. And if they don't come get you break even, it means they went to your second target. And if they go to your second target, that's a $300 trade. That's one trade, not a trading day. That is one trade. That's 3 to 4 minutes of your life typically. And guys, $300 a day is 75 grand a year. And if you make another $100 on top of that, you're in a 6-figure income. Everything you need to be successful with this software, right there in a zip file. It's how to study. It is the pictures you can take. It is, let me look and see what else is in there. It's the PowerPoint that I use to teach. And I think my favorite one, and if you're brand new, guys, I wrote this up. My brother said, Mark, we need to be able to have people capable of taking our software and finding success without ever having to talk to us. What's the path of least resistance? And I said, John, this is it. Tell them how we teach, right? Invite them into Discord. 5 days a week, we teach you 3 rules on 2 charts to recognize advantages. We're going to give them rules. We're going to show you where to find it. We're going to define the indicators that you need to make it happen. And then we're going to break down each advantage so that you can recognize them individually, so that you can piece them together to create a trade. And let's teach them how to study it, because repetition creates recognition. That's in that file as well, guys. The only thing Nexgen doesn't give you is experience. The only thing I can't hand you is the desire to take pictures, is the courage to post in the room, is the, I don't know, the discipline to post your trades and to go back and study them. Guys, that's on you. You now have everything that you need to be successful with the software. Let's start working it. It's like the world's greatest elliptical with every bell and whistle you could ever hope for. And you know that if you just get on it and do the work, you're going to lose the weight. And guys, if you don't do the work, it's not going to do the work for you. So we're going to head into the second hour, and we're going to start looking at pictures, guys. And we're going to look at a lot of pictures because you guys are killing it today. And I absolutely love that. But this is my little disclaimer before the second hour. The key to everything that we do is having a foundation, guys. You are either a freshman in college right now, or you're a senior on your way to your master's. Understand the basics, compound a little bit each day, and you'll get to that next step. So for you brand new users, I do blanket you with very conservative rules. We focus on the recognition of advantages, and I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. I'm very protective of my new users. So for you new users, all termination conditions are bad, and no momentum is bad, and areas beyond large triggers for entry are bad. Blanket rules, because it increases the likelihood of success, and that's where confidence comes from. But they're not always bad. Until you have the experience to recognize when to make exceptions, until you have the experience to build a plan outside of that core, guys, it's just safer to focus on the best of the best, to limit the things you're looking for so it's easier to find what you're looking for. And then just like anything, the more time you spend with it, the more you'll see. This opens doors. And you've got to learn the process that yields results. I can't stress that enough. Learn the process. Learn the pattern. And the results tend to follow, guys. And that's where the KISS plan comes in. If you can keep it that basic, if you can follow simple rules, and most importantly in this room, if you're okay not taking all the trades you see other people taking, but only focusing on your trade, the best trade, the highest probability trade, you can find an extraordinary level of success. And I've watched it for the 5 years I've been teaching people to do this. And the further new users deviate from the simple, the longer it takes new users to find success. I would say 90% of this room started simple, did their best to complicate it, and at some point said, you know what, Mark? I'm going back to the trend trades because the trend trades work. I don't need all the other bells and whistles to be consistent every day. Question everything. We had a question yesterday. Hey, Mark, I'm trying to figure out these darn entries. And we just went back and we created a series of pictures and defined an entry. We've all done it. I love that you guys admit it. Let me put my hand up. I've done it too. If you don't understand termination conditions, let me know. We'll take 10 minutes to talk about termination conditions. If you need help with management, show me a couple pictures. We'll talk about management. Guys, the more you post in this room, the more feedback you get. Be selfish. You know, Pete and Cav were joking. Let's see who can post the most. Let's see who can post the most. Guys, there's a reason that Pete and Cav are successful because they took advantage of this. They showed me everything that they did. And I think most importantly, and guys, I appreciate when you do this, they were open to the feedback. Even if they disagreed with it, if they questioned it, if we had to go back and discuss it, which is totally okay, they accept the feedback and they're like, oh, you know what? Maybe it's not a good idea trading into a key area. Maybe it's not a great idea to fight the shark. Maybe I don't need every trade and I can find success with the very simple concept. So as we get into the second hour, guys, don't be the trade police, please. Focus on those cores. That's what I'm going to do. We're going to focus on momentum. We're going to focus on path. And maybe it's your trade and maybe it's not. That's okay if it's not. It's okay to not be in every move. We'll find the best moves. And you guys hopefully will find the highest level of success. So go take a break. Go stretch your legs, refill your water, pet your dogs, get a snack. And when I come back, we're going to start focusing on the pictures that you guys have posted, answering the questions that you have. Do not be shy, guys. Pretend like it's just the two of us in here. Oh, right on, Cav. We'll see you around 11. I'm going to go stretch my legs, guys. I'll be back in about 5. right, y'all. We're going to get back to it. And Pete, thank you for putting that there. And then, guys, for you that don't know, Pete's been with Nexgen a long time. He's watched the process. He's watched people come through and do this. And he said, just my 2 cents, it's important that you post all of your trades, winners and losers, because Mark will point out all the things you did right, but more importantly, what you did wrong so you can correct it. And Mark won't just tell you, hey, you did this wrong. I'll say, hey, here's your challenge. Here's how to avoid it in the future, guys. So thank you for putting that, Pete. And guys, I'm going to scroll way up to the top, and I just want you to see. That is such a cute dog. Uh-oh. I've got to go all the way to the very top. And I'm going to click on some pictures, and then I'm going to come back down, and I'm going to try and catch the comments. So I go back and forth all morning. If I miss a picture, guys, let me know. If I miss something, just go, Mark, 8:45 timestamp. Will you go take a look at it? JK, I love it. JK traded yesterday afternoon, and he showed up and he said, you know what? This education room is the education room, and he'll go back and he'll look at it and he'll talk about it and let me know what I did. So JK, let's take a look. One of the things that I ask, and I'm still going to give you all the feedback, I promise. But one of the things that I ask, guys, if you really want to take that step forward, if you really want to move forward, tell me what you see. Go back to those 3 elements and say, hey, Mark, this is my chart read on momentum. This is my chart read on the path. This is where I entered and this is where I exited. Did I read it correctly? Was this my best entry? Was this my best exit? Because what happens is, guys, I know exactly what I'm looking at here. Know exactly what I'm looking at here. But I don't know what you see. How do we make this repeatable? How do you make it repeatable? Because, you know, okay, this says down and that went up and this says down and, you know, where did you enter? Did you enter at the fib? At the cross of the lines? Did you enter at the mid-band? Did you wait to see if it closed the gap? You didn't. Maybe you caught it on the way down. Did you take this entry? Because it looks every bit the same as this entry. And how did you manage it? So when I'm looking at this, there's a lot of strength. I can't tell where it's coming from. There's not enough information on the chart. You took a pullback just before the retracement zone and it bounced down. And then it pulled back again right to the areas by the triggers in the retracement zone. And it started down, but it didn't finish. And it actually closed the gap right up to those big triggers, exactly like the gap theory says that it should. So JK, if you entered here and managed aggressive because of the gap, outstanding. If you entered here and got run over and lost a lot of money on the way to the gap, well, then there's an opportunity for correction. So does that make sense? And people hate it being put on the spot. But if you tell me what you did, I can help you do it better. I promise. Odds favorable. We're a tick off of it. And so you held your first trade through 72, through over $300 of drawdown, hoping that it would go down. And then you exited. And it's either a brilliant hold or a fearful hope hold. I don't know which one it is. And then with the momentum in the path, you just kind of jump in way before the area and decided it wasn't right and you just jumped out. And JK, I'd love to help you more, but I need information. I need to know why. And what you'll find is that as soon as you start writing the whys on the chart, you're going to start moving forward. You're going to start getting to where you want to be faster. You're going to be able to repeat the great things. You're going to be able to avoid the bad things. And I'm just going to click on quite a few here, guys. So, Pete, is that Pete? No, this is Bob B. the Man. Tried a new strategy, custom, 10 ATM, emulating trade copiers, stop loss 12 ticks, profits 8 to 16, trading ES at 2:30 Eastern. Strong bottom, odds favorable, The first one is directly into a termination condition, Bob. Price reached resistance, none of the triggers broke. So you broke rule number 2 here, but because of the strong bottom, you know you have a fighting chance, no divergence, and you manage off right at the first sign of trouble. When trouble doesn't do anything, you take more off right before the next trouble. Price didn't, well, right into a termination condition again, and you enter. That's 2 into termination conditions. Quick profits into trouble, quick profits again, and then you finally get a 50-50 trade, and you get paid again. Trading into terms with a strong bottom and odds favorable momentum potential to break is worth the risk. That's how you annotate a chart, guys. I know that I was breaking a rule, I was forfeiting an advantage, but here's why. And when I explain the why, it becomes repeatable. Tight stop management, move to break even after first targets reach, enough room for targets to hit before terms. So, Pete, that's a page out of your book. Because of the strong bottom, because of that level of momentum, I'm willing to take a shot. And that's all it is. It's identifying advantages and being willing to take a shot. Bob, how often is trading in determination conditions going to work out for you? Well, you've got to go back and you've got to define it. It didn't work there, right? And even with odds favorable, it didn't work there. And it didn't work there, and it didn't work there, and it's not working here. And it didn't work there or there, and it didn't work there. Man. Might have worked for you there. Might have worked for you there. Not so much. So you've got to build your own little database, right? You've got to build your own little database. And I think what you have to do eventually is you ask yourself, do I need to trade into these termination conditions to hit my goals? And I don't know. You experienced traders can tell me what you think. I'll show you one that I took this morning. And I was playing around with it. So there's the trade. And I even put we. That was great, guys. That was damn near $1,000 trade. And when I got to Fibonacci resistance, I made the choice to exit because this was a spot that could stop the market. And then it did this. But I had no idea that was going to happen. And the reality is I'm cool with that 75-point run that wasn't mine. Because this is where the market was most likely to stop. And that's the exact same look. And this one stopped it cold. And your rules come to be through not the one time it breaks, not the one time you get away with it, but what's the most likely outcome? Trading into a termination condition. What's the most likely outcome? You know, trading with divergence off of a termination condition at a mid-band floating in a giant retracement zone. And that's kind of where I go. And that's where the feedback goes is, I don't tell you that it's right or wrong. I say, this is what you're up against. Is it going to work more often than it doesn't? And you guys have to say to yourself, if I take this pattern and it loses 70% of the time, do I really want to add that pattern into my work, into my trading plan? And that's on you. Woke up to this freight train, strong downtrend, everything riding. And I love this because this is Pete, and Pete says, I'm not going to just jump in when my small chart is kind of wonky. I'll just wait for everything to start down again. I'll wait till I get below anything that could create a bounce. And in a freight train market, it's pretty easy to get in and get paid right at Fibonacci support. Pete, this is awesome. Great trade. All right, Miss Jen, strong trending market. So what does she mean when she says strong trending market? You know what's funny, guys, is I can recognize your charts by the font in your boxes. A strong trending market means that there's at least 30 bars in the same direction without a reversal bar. At least 30 bars. And I want you guys to see something. When it hit a fib, there was a reaction. And at the fib, there was a reaction. And when they broke support, they came back and tried to get it as resistance. And there's this idea that in a strong trending market, keep selling the mid band until it stops working. And Jen did it. She sold it low, got out of trouble, and then hit a fib. And Jen said, to hell with it. I'll hold it. Didn't get filled, I'll hold it. And she played the odds on the keep selling the mid band until it doesn't work. And then I love that you put that. If not on sim, would have closed on the reversal bar and re-entered at the mid band. Held through pullback, was on sim. Sim thinking is different. And Jen, if you were in live money, what are the chances that mid band would have held? Murphy's Law, right? Ovarian fortitude in this case. Guys, sim will give you balls so big you need to get an extra chair next to you at your desk. It's Friday. Is it story time? It's story time. And about that sim mentality. For those of you that don't know me, haven't heard this story, and a lot of you had, go get a drink of water. I used to race motorcycles in a different life. I was much younger and more flexible. And I was in a practice session, which is simulator, right? There's no pressure. You don't win or lose, and you don't lose places. And it was practice. And I was going at about 60%. I wasn't following my race protocol. And the guy that was champion that year, a good friend of mine, comes up to me in the pits, and he goes, "Mark, why are you going so slow?" I was like 60%, doing little wheelies, having fun. And I was like, "Oh man, it's just practice. It's just practice. It's not real." And he said something, and it's funny, this carries over 20 years later to my trading. How are you going to perform under pressure if you don't practice the way you want to perform, right? If you don't take your profits at fibs on simulator because it might break, you won't take your profits at fibs in real life because this is what you're training your body to do. You won't avoid termination conditions in real life because you're teaching yourself that you can make all the money you could ever spend by trading into them. So when I point out these little challenges, guys, it's not because I'm trying to beat you up. It's because when you switch over to real money, you're going to repeat the behaviors that you've established, that you've created on the simulator. Strong trending market, not sim, one contract. I know Nexgen recommends two, just warming up. Nexgen doesn't make recommendations, guys. I refuse to make recommendations. When you're on simulator, the plan says used to, so you can learn to trust the large chart. Doesn't mean you have to trade two live. Strong trending market, reversal bar off the mid band, out at trouble. Perfect. Absolutely perfect. Nice job, Jen. Joel, everything says down, 50-50, divergence, you're in. Stop is huge. Out of trouble. In a real world scenario, that probably would have got you. I'm not sure why the risk was so big, but large chart leads the way. Nice job, Joel. And then Pete, another quick chili dog. Back bar clears the prior divergence. I like this, Pete. You've gotten a little more mellow. Let's talk about this trade, guys. This is not a Nexgen trade. This is a Nexgen user trade. Back of the bar, all of the price gets away from the decision-making area. With odds favorable momentum, I'll look for an entry. And guys, the entries, just jump in. Ride that momentum. And the only difference, Pete, is one-to-ones create bounces. And you held the bounce. And then you got out right below when it finally got below it. $400 in 60 seconds. Because large chart momentum is hard to stop. So the chili dog rules say give yourself room because that could happen. Nice hold. Great job. And guys, this is what we're going to do on every chart. We're going to go through. What do I see? What did you see? How do they compare? Do I have 2 cents? If I do, I'll add it in. Whoop, we saw that one. Joel, odds favorable, clear path, perfect entry, easy money. Guys, this is what we teach every morning. Odds favorable, clear path, opening like scissors. Enter at the area inside of favorable large triggers. Out at trouble. Nobody's ever been able to mark yes to all of these and do worse than 70%. Outstanding, Joe. Pete, can I get you on language? No more longs waiting for the large chart to start cooperating. You're waiting for the small chart to start cooperating here, Pete. Large chart is odds favorable, and that was a beautiful trade right here. But then your small chart says, Pete, check it out. The sellers keep telling the buyers no. 3 divergences in the same price range. And Pete likes to keep his money. He goes, man, even though this chart's perfect, small chart's showing me change. Instead of taking a trade hoping it works, let me take a picture of why I'm not willing to take this trade. I love that, guys. That's a brilliant picture. Doesn't cost anything to take a picture of your rules not being met, but it sure reinforces that rules are important. Great job, Pete. And then Ron C., who is on the golf course because he hit his goals by 7:30 in the morning, there's that same idea. In a strong trending market, when there's nothing in the way, let it get past anything that could be bouncy. That's a $400 trade in, oh, I don't know, 8 seconds. That's a rodeo trade. Nicely done. Pete says, I can do that. Odds favorable, haven't reached trouble. Rodeo trade, $700, 14 ticks. Out at a loss of momentum. Brilliant management, and let me show you why. Guys, this trade is nothing more than momentum. It's momentum and nothing in the way. And Pete knows that as long as price doesn't close on the wrong side of these triggers, it's going to continue down. And once it does, he says, my advantage is gone. Let me get out of the trade. I'm cool with $700 in 38 seconds of my life. Great job, Pete. Guys, this is such a valuable lesson for you people that are trading momentum. The market continues down. And once it starts going back up on the other side, you don't know when it's going to stop. And the market continues down. And once it gets to the other side, right? And the market goes up. And when it closes on the wrong side of the triggers, it starts down. And the same thing happens here. And guys, that's a great recognition that your advantage is gone and being willing to get paid instead of hoping. Great job, Pete. Pete's getting all the praise today. And then Ron, once again, when the large chart is screaming down, find a way. Find a way. That was 2 trades, 8 contracts, exactly the same. About $1,000 in his account, and now he's golfing. A lot of volume today, a lot of opportunity. Amen. Guys, we love a volatile market. Volatile markets are what make it move. All right. Once again, weak triggers, 5 divergences. I choose to do nothing until my advantages are present. Absolutely love it. Weak top because it's not a termination that reversed it. Odds favorable momentum. Oh, look at that. He tried the jump in. He tried the jump in, but he said, with this look, odds favorable. Mid-band's not an issue. I know where the market shouldn't go, and I'm willing to sit through the retracement so that I can get to my target. And guys, this is experience. This is saying I understand that it's going to retrace. I know where it's most likely to retrace. I know exactly what's most likely to create a bounce. I'm willing to ride the risk. And Pete, this is just expert trading. Expert chart reading, expert understanding of patterns. And that's why at 7:45 in the morning, you're up almost $1,700. Outstanding. Guys, chart reads will let you know how to manage it. $7,000 by 7:45. You know, Nexgen Ben in the other room posted about the same time, Pete, and not that it's a competition. He was at $27,000 before the markets ever even opened. Guys, the potential to make insane amounts of money is there. You just have to find your way. And you know what? I want to go back because Nexgen Ben posted something in the room that I think deserves sharing in this room. Give me 1 second. I'm scrolling back in the Nexgen Traders chat to find it. And for those of you that don't know, Nexgen Ben's been trading with us for a long time. And Nexgen Ben got the software, decided not to do it the way that we teach it, wanted to do it his way, and he struggled a little bit. So here it is right here. I want to show it to you guys. Let me go back to my education room so I can see you guys. He says, I feel like I should probably just throw this out here too. When you stop worrying about making money and concentrate on the execution, perfect entries with a trade plan that is proven to work, you know the rest. The money is a bonus when you lock it in. And my goodness, I can't stress this enough. Focus on the execution, guys. The money is a byproduct of your execution. The money is a byproduct of the execution. Pete, you're up 10 grand with the copier. I love it. Odds favorable. Everything's down. Didn't hit trouble. Let's get paid to trouble. I love your willingness to exit. Small chart said longs were over and you waited patiently for your advantage. And it's just easy. Once you know what you're looking for, guys, once you have a plan, and more importantly, once you commit to your plan, once the idea of deviating from your plan just disgusts you, I don't want to do that. That's not my plan. Guys, that's when it gets easy. All right, let's see what we have. Mini gap. No such thing, Wayne. I know you're watching on YouTube. Never heard of a mini gap. That is odds favorable momentum and a clear path. You tried to go long and it worked. Right back to your trend trade and it worked the other way. Great job. Everything counter. I hope it works. And it did. Financial suicide for most people. But he doesn't get caught up in trying to hold a counter trend trade. He just accepts the trend trade on the way down and makes even more. Great job, Wayne. There's no such thing as a mini gap. Strong top. Market's been moving with big runs. Ob's favorable. And he just jumped in. He said to hell with it. Let's get in with all that momentum and see if we get another big run. And you most certainly did. Great job, Wayne. It's what sailors call time on the pond. There you go. You need the benefits of experience. Well, and when you have your own plan, things like mini gap may be a thing. I've never heard of it. And he says it's not really a gap, but they're lagging behind, and he knows price returns to large triggers. So he's able to take those very basic lessons and turn it into a pattern where he can capitalize. And that's all it is. This is what I've seen 1,000 times, and it wins more than it loses. And even though someone on the outside looking in thinks it's absolutely ridiculous to take this trade, there's been a lot of study, a lot of research, a lot of pictures, and a lot of proving that it works. Steve Diego, everything says down. Your path is clear. Large chart leads the way. You get in, you get out, you make easy money. Everything says down. Oh, that's this one. In, out, money. Large chart leads the way. Path, momentum. In, out, money. What is that? That's almost $500. Couple seconds of your life, Steve Diego. Sorry, I got those switched up. Momentum and path, find a way. Momentum and path, find a way. I love it. You guys are absolutely crushing it today. Remember all of you folks that were complaining that the market wasn't moving enough earlier in the week? Crude's so slow, they're not giving me trades. They're coming. Market does this all the time. A little 5-tick bunt. Bump, bump. I love it. Almost took this pullback to the mid-band, but didn't because of the terms on the large chart. That's intelligent. Why trade into an area that could stop the market? You don't have to. You don't need to make money. Great job, Pete. Whew. I'm going to breathe for a second. This is exciting, guys. It's all momentum and path. How are we doing today? How are we feeling today? New users, are you getting excited? You guys that maybe aren't where you want to be, you see that it can be done, right? A little bit of study, a lot of pictures, green all week. Love that, Andy. Find your way. Just find your way. Odds favorable, clear path. 2 divergences print, but it takes you right back to the mid-band inside of triggers and the market's continuing down. There's a pattern. There's a pattern. Let's see where we're at. Boom, 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 boom. Pete, did we get this one? We sure did. Who's next? Oh, look, it's Pete. I love it. And you know what's awesome, Pete? All of your charts start to get it little by little. Mighty Max, you can get it faster if you just show me what you see. You don't even have to take a trade. You want to see something cool? This is one of the things people don't know is an option. You could just take a picture of your large chart and do this and go smalls below large, space, colors match, scissors open, whatever. Rule 1 met, odds favorable momentum. Take that picture and upload it, right? Drop it in the room, and I want you guys to see this. So, Mighty Max, hypothetically, whoops, that's the wrong picture. Hypothetically, you put this in the room, and I'm gonna take it and I'm gonna say, all right, Mighty Max posted. Let's see what you did. Oh man, look at this. Smalls below the large, space, colors match, scissors open, rule 1. Hey Mark, did I do this right? Did I read this right? And I'm going to say, Mighty Max, you killed it. It's perfect. You couldn't have read that better. Take that picture and go put it in your momentum section and look at it again tomorrow so you know exactly what strong triggers looks like. And guys, this is why the classroom works. It's not me talking until I'm blue in the face. It's you guys saying, this is what I see. Am I seeing it correctly? Am I reading this right? And I say, hell yeah. Don't miss this one. And you could have done it with this as a termination. And you could have done it with this as a termination. And you could have done it with this as a clear path. And there's all these different opportunities. All you have to do is post in the room. And I promise you, I'll give you everything in my arsenal to make you a better chart reader. Not trying to put you on the spot there, Mighty Max. You just happen to be the one that posted. Whoops, there we go. That's the one, Pete. And what I was saying about Pete's charts is what Pete's doing is Pete doesn't need these lessons as much as some of us do. So Pete says, hey, I just want to give you a glimpse into my mind. The market churned for a little bit, and then it rolled again, and I had odds favorable momentum and the potential to break. So I took the pullback to resistance inside of favorable large triggers, and I knew that it wasn't high probability, so I made a quick $200. Just did it real fast because I know that it's not perfect. But there's still opportunities, even in imperfection. Awesome, Mighty Max. I never want to call someone out and make them uncomfortable. So I appreciate that. Thank you. But I think that there's a definitive reason that this classroom is so effective, and it's not me talking. It's you guys participating. It's you guys telling me what you see. Strong top, triggers roll. Odds favorable, momentum 50-50. Because of the 50-50, I had a sell stop here not filled. Wanted the market to come get me because of 50-50 with divergence. Absolutely insisted that the market give Jen exactly what she wants or she's not taking it. And on a 50-50 with two divergences, Jen says that one loses more than it wins. I choose not to take it. And Jen, are you okay with not being in that move even though it went down? That's what everybody has to come to terms with. I chose not to be in this because I lost advantages, but it did what it might have done anyway. Are you going to break your rules next time, or are you going to stick to the plan? I love it. Rules breaking has decimated my trading. Everybody I know. And one of my favorite phrases in the room is when I just follow my rules, I tend to win that day. Great trade. Great picture. Or great no trade, I suppose. Andy's been green all week. Let's see what he's doing. Andy says, Andy, your triggers are still a little wonky. Momentum, clear path. You get in at the fib. Rule number 3 broken. And you still make money. And then, guys, one of the things, when you're on the wrong side of everything, it's okay to force the bar. Force the confirmation bar. Is the ES still cranking? News, right? News can move a market. Guys, the tariffs are big news. Whether it's on forexfactory.com or not, the tariffs are huge news. People love emotional reactions. I need to find somebody with no political affiliation to explain to me the tariff stuff. Didn't take the pullback short. Weak triggers at a fib. Didn't like the entry because of a huge gap. Can't mitigate risk, right? Can't define acceptable risk on this look. Chose not to do it. No worries. Just keep practicing, Mighty Max. You'll get there. Are you using Capture? Whoa. Are you using Snagit? Snagit? Cool. Let's do one together. You want to do one together? Maybe I can be a little helpful. Awesome. So, couple things. I'm going to click the big Capture button. If you hover over only one chart, it's only going to give me one chart's worth of information. So when you're using Snagit, and you can do it over 2-3 monitors if you need to, left click at the top left corner of your large chart and drag it down to the bottom of your small chart. And then just release. And then it's going to give you 2 charts worth of information. And this is how we get the absolute best. And then up here you've got arrows. I love arrows because you can show me where you did things. You can also do it with the shapes. And I've pulled a lot of my options out of here. I entered here and I exited here. And then over here I can use the arrow again. And I can use the arrow again. And what I'm going to do is click the call out. And your call out's going to have like 50 options here, Mighty Max. I have deleted every one of them except the one that I like to use. And then I've made it how I want it to look. Just black, white font. And here you're just going to put strong triggers. And you're going to put clear path. And what you're doing is you're telling me, hey Mark, this is what I saw. I saw that separation and I knew that it was strong. And I noticed that it didn't reach the fib. And I knew that my path was clear. And then over here, and I think this is the most impactful thing that you can write, I entered at an area inside of triggers. And you might even put exited at fib. And what you've done is you've said, here's my read, here's where I entered, Here's where I exited. What do you think? And I'm going to say, your chart read is perfect. Large chart's the best look ever. And I'm probably even going to say, hey, Mighty Max, I'm stoked that you didn't get in without an area, that you said, hey, this isn't my trade. That's not my look. My trade comes from areas within, and they rewarded you. They rewarded your patience. And everybody in this room that jumped in right here probably panicked and got stopped out. And Max, you wrote it right to the fib. And what a great trade, and what a great pattern. And you're going to be like, whoa, I didn't even see that. I was just late making decisions, but I see what he's saying there. And you're going to click that share link. And if you use the drop down, it takes a second. If you use the drop down and you share it to screencast, that's the one that lets you paste the screencast link in the room. But now it's a complete picture. So if you go back to your spreadsheet and you go to building your plan, that would be a picture that I would be like, oh man, don't miss this one. It's perfect. And I'm building a plan. So if you go through and just practice a little bit with it. Practice writing on charts though. Get in the habit of writing on charts. And the great thing is when you come back to this picture tomorrow and you're like, man, what did I do yesterday? I don't even remember. Had a great night, drank a little too much, maybe smoked a cigarette that doesn't come out of a package. And hold on, what did I do? Well, I had strong triggers and I had a clear path and I entered the area inside of triggers and I got out at fibs and man, I made $250 in a couple seconds. This is what I want to do today. Does that make sense? So try and get both of those charts for me. And play around with the different options for writing on the charts. It'll lead you down the path for sure. You said that Ninja Trader crashed. It's telling you to stop trading for the day. 2,500 is not a bad stopping point. But here we go again. Odds favorable in a clear path. Pete's going to find a way. $600, 12 ticks, forward lot. Instant. And I'm gonna tell you, Pete, you're killing it today. And your patience has blossomed in the last week or so. You've really pumped the brakes on trading in determination conditions, and that clear path seems to be paying huge dividends. So I'm stoked, man. Great job. And I've noticed that you've even joined me preaching on you don't need them. And it does. And historically, so one of the things, and guys, this is annoying as hell in my life. I don't forget things. And it really is. I don't forget anything. And there was a time, maybe 5 months ago, 6 months ago, Pete, where you really had some struggles. I remember you had a bad week. And your bad week was you being the victim of believing that you could break these areas rather than waiting for them to clear. And you avoided it like the plague for about 2 or 3 months. And then you started feeling invincible again. And I'm not sure what the result was from that. But I've noticed that you avoid it like the plague again. So guys, even the best lessons, you're going to have to relearn them a little bit here and there. Great job, Pete. JK, it's hard to get you to answer after you post. Can you tell me why? Time on the pond. I'm going to start using that. Can you tell me why you jumped in? I love it. So, and I'm not asking for me. I know exactly why you jumped in. But let me show you why I ask, if you don't mind, if you'll indulge me here. And this is for everybody, not just you. This is for Mighty Max too, who's learning to post. Strong triggers, right? That's probably why you did it. And my question would be, why did you trade directly into a fib with all of the triggers below? And JK might say, well, Mart, you can clearly see that I got a tick above the fib. My path was clear. And I don't know if that's it or not. And that's where I have to say, but JK, this thing, especially from a bad bottom, had a lot of potential to hold and ruin your day. 32 flavors of just loss and fast loss. So JK, you can really create a little more of advantage for yourself if at least on the small chart, let the back of the bar get away from that decision-making process. Be willing to sit tight another 4 or 5 ticks. And what you've done is you've taken that large chart momentum and you've let it get past anything that could create a bounce on the small chart. And now you're just riding that momentum. And man, you're killing it. But I also noticed, JK, I don't see stops and targets. And that is a way to destroy things quickly. So I'm forced to ask, do you know how to put in stops and targets, or did you forget to do it this morning? Because I have forgotten to do it. Okay. I won't tell you what to do, but I would certainly encourage you, get those stops and targets in there for sure. So JK, if you tell me why, we can talk about it. And what happens is when I say, if you let price clear the fib completely, rather than one tick, it increases the likelihood of success. And then you're like, oh, well, I told him that I let it go a tick, and he said I could do it even better like this. It just lets me know what you're seeing and what you're thinking, JK, which means that I get to give you the best feedback I know how to give you. Does that make sense? Awesome. Cool. And I know it sounds, I'm like a nagging parent. Show me, tell me, show me, tell me. I promise it's for you, not me. All right, guys. I'm going to take a few minutes. I'm going to leave you with crude oil and that termination condition that held, and that termination condition that appears to be holding in the moment. From fib to fib. And JK, great trade. And it was easy money all the way up to trouble. I love it. So guys, I'm going to go stretch my legs for a second. I'm going to come back, and when I do, last hour, I want you to show me everything. Tell me everything. Let's talk about it, and let's head into the weekend strong, guys. I'll be back in a few. Well, that was a little bit of a spike, wasn't it? And look where it started. Right at a fib. Right at a termination condition that reversed the market. And look at the spike. How cool is that? You guys knew about it. And look at that. When it hit this fib, it reacted. And when it hit that fib, it reacted. And when it hit this fib, it reacted. I love this stuff. I get excited about this stuff. I think it's pretty cool. You made a trade? Let's see it, JK. You gonna ride on it? I can't wait to see it. By the way, funded another account in the quiver. Nicely job. Just a blurb about trade copiers. Nexgen allows you to pinpoint entries and exits using limit orders. That's what the main account trades. Following accounts use market orders. Look at the difference in profit. 800. Learn to use limit orders. That's a big difference. That's pretty cool, Pete. That's stuff that I didn't know. I'm going to steal that. That's the kind of thing I'm going to pass over to John Novak. That's pretty awesome. Whew. Man, volatility. What's the other market doing? I love 680. I love 680. How did that one work out? Oh, 3 divergences might have kept you out of that one, huh? Bummer. How about this one? Is that the same one? Man. No, there it is. 3 divergences again. Son of a gun. If you're in the pop out, JK, you have to Control Alt Delete. There's one for you, and it's going down. Guys, the market is on crack. A lot of fun. What do you guys want to talk about? We have an hour. Anybody have big plans for the weekend? Woo, look at that one. JK, I bet yours looks something like this. Everything says up. Let it clear. See how Cav lets it get just a little bit above that problem spot? And it's just easy money all the way up. Great job, Cav. And it stinks to wait for that little bit of confirmation sometimes. But wow, it pays dividends so often. Study, 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 Max. There you go, Pete. You're in Florida now, aren't you? Hopefully you guys have some great weather. It's golf season for another month or two down there. I'm excited. John Novak has his spine fusion in 12 days. He's going to get everything fixed. So I'll be down in Sarasota in about 6 months to play a round of golf. You'll have to come up from the Keys. We'll get that Nexgen. Get that Nexgen golf tournament going. Great job, Cav. It depends, Jen. My first fusion was probably about 8 or 9 months before I felt almost completely normal doing nothing. My second fusion was a revision of the first. It was a much bigger surgery, and it was probably about 14 months before I could do anything without some level of pain. Worth every second. Oh, If you had any idea how miserable it was to need that surgery, John posted it the other day in the room. He goes, when you're looking forward to spine surgery, you know it's bad. And he's in a spot right now, and I was too. I have maybe 60% feeling in my left leg because of the damage everything did before I could get it fixed. But it's definitely better fixed than it is unfixed. Bad genetics. It was it. Just degenerative disc disease is what it is. It runs in the family. I have it. John has it. John's having the surgery that I had 2 years ago. No, gosh, almost 5 years ago. It's been a while. I'm looking to see. No, I don't have a picture. My mom's side. Yeah, no, it's definitely mom's side. But mums are perfect in every way, except that one. So yeah, my mom's had cervical fusion. John has had cervical and lumbar. It's the Novak curse. I keep telling my boys, stay thin, stay strong. Gotta fight it. Gotta fight it. It's all right though. Are we done? Are we done, Sharon? The Nexgen Open. I think that's such a good idea. You new guys ready for a good lesson? Once your areas are on the wrong side of triggers, your advantage from Rule 3 is gone. You don't know if, when, or where the market may continue down. So JK and Mighty Max and you guys that are still learning the rules, there's a reason that rule number 3 says area inside of trigger lines. Because once you get to the wrong side, you just don't know. Anybody get run over on that trade hoping a mid-band held? Here it did, inside of the triggers. Once you get to the wrong side of the triggers, guys, all bets are off. This is one of the most powerful lessons for trend trade entries you could ever get. And some people say, man, with this look, I want that trend trade, but I'm going to force it to give me a confirmation bar. I'm going to force it to give me a reversal bar. You have seasickness watching this? Oh, Jim. Get you some Dramamine. Yeah, it's a crazy market. Man. Everybody was so sad. I can't get entries. The market's not giving me anything. And then the market says, hold my beer. Let's do something here. Yeah, John and I were talking. The large, Tracy, so when I say wrong side of the triggers, thank you for asking that question. Let me show you exactly what I mean. Get up here. So, the idea for entry, reversal bar signals the pullback, right? Are you comfortable with the entry rules? And then once I get the reversal bar, I'm going to look to the trigger lines because this is where the retracement is most likely to occur. And I need areas, and let's shade it. I need my areas to be in this range, in those trigger range. Because the retracement is most likely to go to the top of this range. So when I say wrong side of the triggers, what I'm saying, and let's put it on here. I'll give you guys this. When I say wrong side of triggers, I mean beyond where the retracement is most likely to occur. Above the large synth for shorts, below large synth for longs. Does that make sense? So what we're saying is we've already blown through where the retracement's most likely to occur. I don't know if, when, or where that thing's gonna do. Let me give you guys this picture. You drop this in your spreadsheet under entries, guys. This will be a good one for you. I see John Novak typing. Be careful, everybody. About to get hit with some smart stuff. So Tracy, anytime I say wrong side of the triggers, that's exactly what I'm referring to. That's it. There wasn't an entry that fits the rules, areas inside of triggers. And that little understanding, that little concept, and I think even more importantly, using that language, the areas inside of triggers, it keeps you out a lot. It keeps you out of a lot. Oh, Pete, I shared your picture with John. He's got some reasoning on it. Kind of cool. Does that make sense, Tracy? Nice. So look at this one. Odds favorable. Everything's up. And Cav said they didn't get to my area inside of triggers. Well, I'm just going to catch it on the way up with this look and make a little money. And just a little modification. Great stuff, Cav. I like it. Whoops, you accidentally double posted, JK. That's the one we talked about earlier. Sometimes they stick to your clipboard. Double check for me. That's the one that we saw. Well, I don't seem to have it in here. No, it's okay. I love that you had a 680. It was momentum and path, right? You took the same one Cav took. Yeah. I love this. When everything is screaming up, go up with it. Right, JK? Time for some of you guys to lose those blue checks and make them green. Today was 7 trades. So Pete, you're saying in a market as volatile as today, you only took 7 trades and with your copiers was able to make 10 grand? Guys, I hope that sinks in. I hope you're listening. So more isn't necessarily better. Better is better. Check it out. We have 3 divergences in the same price range, right at a termination condition. Now we have odds favorable momentum, and the mid-band's not a termination condition. And now we're getting a pullback, perhaps, to an area inside of triggers. Oh, they missed me twice. Maybe they'll come back this time. You guys ever done this where you just chase that darn market down? And as long as you have this look and don't hit that blue fib, it's still in play. Uh-oh. My mid-band's starting to go to the other side. No, it's back in. There it is. Buffalo George, it's fun. It's fun. Quality versus quantity. Amen. Uh-oh. Cav, broken link. Will you try it again for me? And sometimes they just don't work. That was a good look. Just didn't work. That's part of your 20-30%, ladies and gentlemen. Thanks, Kev. Same thing. Everything says down. Didn't quite get the trend trade. Caught it after, but the expectations are the same. Beautiful trade. Oil just insane today. Glad you made your money early, for sure. What a great way to go into the weekend, Pete. Did you ever get that 9/11? You were threatening a couple months ago. Still looking? I like it. Cav, great job. That's not Sim. Cav's rocking it live. Hey, Cav, have a great weekend. Thank you for posting in the room as much as you do. I really do appreciate it. You guys that take the time to post, even though I know you don't need my feedback at this point, you've got your plan. You're doing it for the people around you, and that's one of the reasons this community is so amazing, is because everybody is here, and everybody's looking for the same level of success. I appreciate it. I can't begin to tell you how much I appreciate it. Odds favorable and a clear path. And if I get a reversal bar, I have a mid band inside of triggers. And now it's on the wrong side of triggers once again. I do too, Pete. I say the same thing every day. I know that I do. And you guys ask one question, and you're like, hey, Mark, what about this? And it makes me rethink everything. Wow, I never thought about it like that. I never thought about this take on the entry. I never thought about that idea for management. And this class is a constant evolution because of what you guys bring to the table, because of the trades and the questions and the successes and the problems. You guys make me look good. I'm not going to lie. You guys make me appear smart because y'all have to sit through the live market and do this. I get to click on your picture. It's not moving. It's easy to read. It's absolutely beautiful. I've got no stress. Guys, I think still pictures are where the good stuff happens. Especially on when to take and not to take 50-50s. There's an art to 50-50s, Pete, because a lot of them aren't as good as we think they are. And until you really focus on the things that make them successful, it's hard to identify the things that make them unsuccessful, I think. Like, you really have to talk about advantages. You have to talk about the fact that it's not a clear path. And you have to understand that these are weak triggers. And that's a loss of momentum. And it's fun to do, right? And you got to say, okay, tail into momentum, right? Not odds favorable. Is there still an opportunity? No areas inside. Guys, this market is going ape shit. That's a technical term. It's a technical term. They are killing it. So is crude. Look at that bad boy, though. Boom, boom, boom. Path and momentum, don't trade into terms. It really is that easy, isn't it? Well, Bob, you've already learned, right? You know. Who's ever broken up with somebody because they were the absolute wrong person for you and found yourself back together with them? Because we're human. At least. My gosh. I had a girl try to run me over with her truck, bounce me off the front fender. We got back together. You gotta live. You gotta learn. You got to. And part of it is making those mistakes, right? Yeah. Fork in the thigh. Wasn't even a try, Bob. Hanging out of my thigh. Different girl. I might make bad decisions. No, I didn't. I made the right decision 30 years ago. But you got to make mistakes until you figure it out, right? There we go. There's how it all comes full circle. You got to mess it up a few times. You got to know what doesn't work for you so that you can find what does work for you. And then you've got to believe it. And that's not relationship advice, but that's not any advice. But look at that. Was there an opportunity for any of you guys in there? Was there an opportunity for any of you to take a trade to make some money? What do you think? Am I the only one that sees this? I don't think so. It's just fast, super fast, crazy fast. It's only 11:23, guys, and I am rambling incessantly. It's perfect. It doesn't get any better than that. Sorry, I'm typing to my brother. Multitasking. Multitasking. Getting stats for the funding company, guys. Getting close. Oh, I've been saying that for it feels like forever. Getting close. Miss Jen put M on a plane. I know she's excited. We're so close. I love it, Jen. I love it. She sends me little messages every now and then. Just, hey, what's up? How's it going? Where are you at with it? I'm so excited. I feel like I know her. She's so excited. You're a good aunt. That's what she was saying. They're like 14 hours ahead of me. That would make it too hard, I think. I'm not an night owl. Guys, did you see how fast that just zipped? I don't know about you. I can't make decisions that fast. I'm pretty good at reading my indicators. This would be an untradeable market for me. This would be a time where I would choose probably just to sit on my hands. I can't get my entries in. I can't get my stops in place. I can't react when the market reacts faster than I do. Is it okay to not trade one day out of the year? A couple days out of the year? Guys, it's Friday. That's the difference between traders, Joel, and other workers. I mean, this is our job. Have to run. See you Monday. Up 860. Nice job. Taking your Aston for a spin and some golf. JK, that sounds like an amazing afternoon. Hit them straight, man. We'll see you Monday morning. Thanks for being here this week. Thanks for posting so much. Bring a picture of the Aston. Those are such pretty cars. We'll see you next week, bud. We were talking about how it's so easy to get excited when the market's moving that fast that you want to be a part of it. And then you realize you just can't time it. Pictures. Love pictures. But that was a pullback to resistance right inside of triggers. Need to head out. Doctor appointment. Join your weekend. You too. PJ, have you talked to Jason in tech? The first thing I would ask if it's taken a long time is how's your computer? Is it fast? Is it old? How's your internet? Is it fast? Is it old? New doesn't mean fast, right? I could buy a new Kia and it's still not fast. I would get with Jason, PJ. I would get with Jason and just say, hey, Jason, here's what's going on. Will you get on my computer and see if you see anything? And there's a lot of little things that he can run through faster than you and I ever could. Um, I had a problem where my stuff was taking forever to load, and it turned out that my computer was overheating. So I had to go through and rebuild and put a brand new cooler in it and stuff like that. And it was weird because it wasn't a memory issue or a processor issue or even an internet issue. I was literally overheating. And it took John Novak and I like a week and a half of John getting on my computer to finally figure that one out. So yeah, let Jason do it. He's amazing. He can fix anything. And I hate to not give answers, but that's the best answer. Pete, I'm not even looking at it. Well, yeah, I am. Let me take a picture. Done for the day, but another short brewing in oil. The big fat fib broke on the large chart with a clear path, but 3 divergences trying to kill the party on the small chart. Yep. That's it. Let the small chart show you change you can't see on the large chart. What did it end up doing? It did end up bouncing, didn't it? Little untradeable, and then eventually it broke. Decisions are made at key areas. There it is right there. Isn't that awesome? You knew about it. You saw it. Look at the fight between buyers and sellers right at the key area. Guys, I'm amazed by fibs all the time. I don't know how John Novak got so smart. He wasn't this smart when we were growing up. He must have hit his head or something or got bit by a radioactive spider. I don't know. But it's pretty cool. Sorry guys, by Friday at 11:30 when nobody's posting, I go sideways. I know that I do.